Day Trader Barlow here. Every week I show you what you should be looking at in the market, how to potentially take advantage of that, what is performing well, what is underperforming, and what happened this week. Looking at the daily time frame, I'm going to review the sectors and the futures instruments that are most relevant to most traders and investors. If you're trading on a daily time frame or just investing in your retirement account, this is something you want to pay attention to. This is going to be a bit of a longer video. There's a lot happening. If you stay till the end, you'll get a full view of indications on the market, what sectors and specific stocks. With the war in Iran still going on, a potential ceasefire that boosted the markets, let's take a look at what is performing well, what we need to look out for. What you should put on your chart is the 105 SMMA. This will be an indicator whether you should be looking at assets to perform well or to underperform. This correlates with the 200 simple moving average. So simple moving average versus smooth moving average, very similar. I just like using the smooth moving average because I use that for day trading as well. I can just leave it on the chart, go to any time frame, and see either short-term or long-term how I should be positioned in the markets. Looking at the bigger picture, though, is so important because we want to have that overall view. How are these assets performing? If you want to open a self-directed brokerage account, this becomes imperative that you take a look at the daily time frame, even zoom out to the monthly time frame to see how the big picture actually looks. You won't get sucked into the different news headlines, economic release necessarily that is going to affect it for the next week. You're looking at the larger time frame. That's going to give you a really good idea of overall how each sector is performing, how the market in general is performing, and where you should be positioned. If you are investing in a retirement account and you have 20 years till you're retired, maybe you don't care about this stuff. Maybe you just want to check in every once in a while. The monthly time frame is a great way to see how overall everything's performing, and if anything major would make you consider reallocating. For example, back here during March of 2020, during the COVID pandemic, this was something you would have noticed on the monthly chart with a huge spike in volume to the downside. We still held above both of these moving averages on the monthly time frame. Looking at the XLI industrial sector, huge gap up after Tuesday from the ceasefire. XLK, the tech sector, has rebounded above the moving average, gapping up overnight from Tuesday to Wednesday. A little indecision here. QQQ, you can see the same type of doji candle on the daily here. We want to see for continuation above 614 on QQQ, below 609, potentially for a retest of these moving averages. Going over to discretionary spending is still not able to break above these levels, which indicates, again, people do not have the money to spend on discretionary spending. They're trying to cover their essentials, their rent, their mortgage, their gas, groceries. Everything is inflated right now, especially with oil prices as high as they are. Now, we did have a nice drop in oil. You can see from the highs, we are testing that 382 Fibonacci level here, and you saw we rebounded off of that. Overall, still a trend higher. So I would like to see oil below $90 per barrel. You can see this goes back all the way to the beginning of March, where we had this uncertainty with the war, potential ceasefire, then a ceasefire of 14 days. The market responded with a large drop in the price of oil. So this is a good thing for everyone here in the US. How do high oil prices affect the overall spending behavior of you? If we have high oil prices, it's going to increase, first of all, for companies, the price of diesel for trucks, fuel for ships, jet fuel for planes. Shipping costs rise. Businesses are going to pass that cost to you. So groceries, if you order something off of Amazon, construction material for building houses, everything is going to be more expensive because it costs more to ship. Production also is affected for farming. So grocery prices could potentially increase. Plastics come from petroleum. How much stuff is packaged in plastic? Everything is packaged in plastic right now. Factories as well are tied to oil and gas, as well as your electricity that you pay every month. So all these things are going to go up. And also for you, when you're fueling up at the gas pump, you're spending more to fill your tank. So you're going to have to cut your spending elsewhere. And we can see that reflected in the consumer discretionary sector. I want to stop really quick. Please hit that like and subscribe.
2 turns of 4, 4 turns of 8. Sleep and get paid. Rich when I wait. I bet the bank. I set the pace. That's what I make. That's what I make. Counting pockets, that's a trending topic. You got this and you got that, but got no spending options. I keep quiet, but still get it rocking. I keep quiet with it in my pocket. I keep quiet, moving stuff is silent.